Hello guys, welcome to the stock trading session for today, solid as a stock. So let me just put the disclaimers on the screen. Please read them, top left hand side. Even if you need to pause the video to do so, please read them so you can understand what you can expect from videos like this. In a nutshell, we are going to show you how we place trades. I say we. I will be showing you how I place trades using the technology that we use here at Tradictive. And it's up to you to decide if it fits your trade plan or not. Just because I place a trade doesn't mean you should obviously look at what your trade plan says and your own risk parameters. Okay, so let me just point out here a couple of places you can go if you need help. You've got my email address, which is becky@tradictive.com, which is just here. And you've also got, take that off for the glare, tradewithufos.com/Becky, which has just come up there on the screen. Now that will take you to this screen here, or this page here. Now from this page, from this link, you can get different things depending on what you need. So there's one-on-one coaching with me if you'd like to book that. Apps, courses, coaching, live trading schedules, and etc. If you scroll down, we'll use this today. You can track my trades that I place in these kind of sessions, stocks, Forex, and cryptos. Get an idea of what's happening with the trades. Why would we have smaller losses or smaller profits as opposed to a full loss or a full profit? Why would we cancel trades? You can follow the snapshot link there to go and have a look at what these trades are doing and how we are managing them. So you can check that out as well. I would recommend, especially if you are watching these videos, if you are tracking the kind of trades that we're placing and you want to understand what happened with them and how we might have maybe cancelled before it even triggered. So we didn't win or we didn't lose, we just didn't get into the trade. What happens if we go break even? How does that work? Why might we close a trade early? You can use this place to learn. Now, if you scroll down, more information on the different apps that we use on different platforms. Scroll down again, information on the platform that we use, that we have. If you scroll down again, right to the bottom, there's a question and answer section, which is especially useful because most of the time, the questions that you have probably have already been answered and the answer is already here. Now, if it's not, then you can ask a question for free and we'll answer it there anyway. So you can use this section to again get free support from here. Okay, so we are looking at stock trades. So first things first, let's have a look at our weekly economic calendar and be aware of what might affect us for the next week or so in US stocks. Now, we're looking at US stocks because that tends to be where the volume is, but the application, the methodology we use, the apps that we use can be used on any stock market, on any or pretty much any market. It's the same principles. We're just applying it to US stocks for this case. So if you might tell from my accent, you might be based in the UK like me, apply the same to looking at UK stocks if you can look at that on these platforms. You could do the same if you're looking at the Nikkei or if you're looking at the IBEX or whatever you're looking at. You can apply the same technology, providing you can still see on these platforms, providing you can still see our UFOs and our auto climate, apply it to anything. Okay, so we had non-farm payrolls today. That's already happened. We have Tuesday next week, 10 a.m. Eastern, and Wednesday next week, 9 a.m. Eastern, where we might see some extra volatility in the US stock markets. So be aware on those days. You might want to close out of trades you're already in and then get back into them after the news has come out. You might choose to just keep an eye and see what you do. You might choose to reduce your risk on the trades that we place if you're going to follow them for today. You might ignore it entirely. That's up to you, depending on how risk averse or risk tolerant you are and how you utilize this information. The information is there, it's objective, there's no arguing with it. What to do with it, that becomes a subjective choice per trader, depending mostly on risk tolerance. So just to be aware of these things, okay? Alrighty, so let's look at new opportunities. So we're going to go to top, which is our platform that we use. Now I'm looking here at a weekly chart of the ES. The ES is the continuous futures contract that represents the S&P 500, which is the top 500 US stocks. essentially, we're looking at the US stock market in a nutshell right now, US stock market. Now, on a weekly chart of the US stock market, we have a thick red dot. That tells us probability is down. That means we are going to start by looking for individual stocks that also have probability down, therefore looking for shorting opportunities. You could look for trades that have probability up. There's nothing wrong with that. You can still go long on certain stocks. You might want to, especially if you're using them for maybe longer term or shorter term, or maybe for dividend returns. But for us in this case, on a weekly chart of the ES, which is going to be what we use for each individual stock, probability down, and therefore we're going to start with slightly higher probabilities to have correlation on our side. If the individual stocks also have probability down, then you've got correlation there between the individual stock and the stock market as a whole, giving it slightly extra probability that it works out in that way. Okay, so let's have a look at our matrix. Okay, so I've got a minimum price here of $10, maximum price of 100. We can take that out and have a max price of whatever. Obviously, the higher the price of the stock, the less shares you can buy of that stock or sell of that stock, which gives you less control over exact risk parameters, and of course might price some people out. Now, I definitely wouldn't be trading stocks that were worth thousands of dollars a share personally, based on my own risk tolerance and how I feel about those things. But we'll leave it open and we will place trades so that wherever you're at on that spectrum, you've got opportunity that you can see. Now we're also going to, so we're looking at all stocks and ETFs within the US stock market. I'm just going to click all there, so all groups. Now, we are looking at trades that have a weekly, in this case, confirmed down. We're looking at sensible near the 9 EMA. What does that mean? Give me a second, I will explain. So we're looking at a weekly chart because we've just seen that the weekly of the ES has probability down. So we want to look for individual stocks that also have probability down on that time frame. So weekly confirmed down. That's what we're looking at so far. Sensible means it's towards the start of that move down. So we've got more room to take it to the downside. And near the 9 EMA, because that is an ideal trading price. So we're filtering by trades that already check a lot of our boxes. We're still going to then look at those trades and see if they line up with our UFOs, but at least we're being more specific about what we're looking at. I want to exclude trades that have earnings in the next 5 days, because towards the start of these trades is when we're going to be closer to our entry and therefore closer to our stop. If we've got earnings coming out within the next week, trading days, then we see more volatility. That can stop us out. So I'm going to remove those. Now, let's have a look. That's given us quite a long list. So what I might do, just to be more specific, add some more probabilities here. I'm going to put early. So this is right at the start. Still a long list. Okay. This is right at the start of that move to the downside. That's what we're looking at here. So let's go alphabetically, bottom to top, kind of do it that way. Sometimes it doesn't matter. Sometimes I'll do A to Z. Sometimes we'll do Z to A. It doesn't matter. We're just going to go through one by one. We're going to look at each of these stocks. We're going to weigh up what we see in front of us. Do we have trading opportunity or not? If we do, we place the trade. If we don't, we move on. So we'll see what happens. Let's go. Start with XHR. Xenia Hotels and Resorts. Okay, so first things first with this, I'm not 100% convinced we're going to have a good opportunity here. Depends on the size of the trade or the size of the risk in terms of the amount of the price. Because we have, yes, probability down. We also have sellers above us, which is helpful. But we also have buyers quite close below us. Now, as long as we can get out of the trade before then fine. But price has just hit those buyers. So we're kind of fighting against buyers right now. So like I said, it will depend on the size of the trade on the right-hand side. And I will be clear in a moment as to what that really means. And we might not have probability at all, which looks like we don't. So nothing to be done there. Now, let me just show you what I mean. So the buyers here start at 15.38, which means we would want to be out of the trade before 15.38. We have two targets. First target is 1-to-1 away. Second target has to be more than 1-to-1 away and will be at 15.38. So let's just quickly, we can do this mathematically, or let me draw it in. Let's say, for example, we had, so the EMA is at 16.48. So let's say, there you go, let's say we had a UFO kind of here, okay, making that up, but let's say it was there. So the EMA was within it, and that was our area. So let's say it went from 1645 to 1675. Let's make that easy. That's 30 cents. So 1-to-1 away would be 1615. Well, that works then, because 1615 is above 1538. So we can get our 1-to-1 and we can still take a little bit. Now, what if instead, now let's sorry, playing about with this too much. What if instead we had a UFO that was huge and it was like this? So we got in at 1645, but maybe we got out at 1775. So that would be $1.30 worth of risk. Well, then $1.30 worth of reward would take us to, I'm going to make this up again. So let's say it's 1650 to 1775. So it would take us to 1525, right? It would take us to 1525, which would be within the buyers. So we can't have a 1-to-1 target within the opposite. So if we're selling, we don't want our 1-to-1 target to fall within buyers. If we are buying, we don't want our 1-to-1 target to fall within sellers. So it would have depended on the size of the UFO on the right-hand side as to whether or not we could have got into this trade. As it turns out, not enough probability anyway, because we don't have UFOs lining up. Hopefully that makes sense. I feel like I rambled explaining that, but hopefully that makes sense. Okay, woof, this is Petco Health and Wellness. Just squish this down. We don't have any buyers to be seen. The EMA is at 15.35. Let's filter through timeframes and see if we find one that lines up. We do not, meaning we do not have any of these red UFOs. We see the prices here. None of them coincide with this number, which is 1535, which is the EMA price. If that's not lining up, we don't place the trade. UBS, next one. Again, no buyers. That's because we've seen a lot of volatility down. That would have been a nice trade to be in, wouldn't it? If you were short at the top of that. Okay, so 1628 is the, let's squish this like this. 1628 is the EMA. So let's have a look here for UFOs. That might fit with that. 1628. Nothing there. The UFOs are too high. Next one, TU, Telescope. This one would be a great one to get in because of the fact that we've just hit sellers as well on a bigger time frame. So if we can add to that probability, even better. So extra sellers here, which we're happy with. 23.05. Now, we do have an opportunity here on the 144, but we're not going to take it. Let me explain why. So the EMA is at 23.05. These sellers start at 23.07. Now you might say, hold on, they're not coinciding, they're not overlapping. Price is at 22.82. As price moves up by 30 odd 30 odd cents to hit our UFO, then the EMA is likely to move up by 2 cents. So essentially, we would have a strong probability that we would have it align should price move to that entry level. However, see this number up here? It's 45.83%. That tells us the probability rate, if you want to call it that. It's more complex than that, but it gives us the probability rate of our UFOs. We want that to be a minimum of 50%, which means it's not 50%. We move, change timeframes, see if we have any other opportunity. Unfortunately, again, here we've got a UFO, but that number is below 50. 2-day, where that number is above 50, but we don't have a UFO. 3-day. Brilliant. Here we go. We have an opportunity on the 3-day chart. We've got 58% probabilities of the UFOs on this time frame. We've got 23.05 fits nice and snug within this UFO. We've also got sellers close to us on a bigger time frame, and we've got buyers a long way away. So this is going to be our trade. So I'm going to bring in the log so we can make a log of this here, and then we'll go and place the trade on TradingView. So today is September the 2nd, 2022. It's weird doing it the American way because we don't do it like that. I'll reformat it later. Okay, so we are looking at TU, 1 week and 3 days. We're going short. The entry will be this first number. That's the lowest number where the sellers start, 22.96. The stop loss, we're going to take the higher number, 23.56. I'm going to add 10 cents, 23.66. Okay. So the safety target's already been calculated. We'll go and put that in a minute. Our final target is going to be the top of this UFO, which is 20.98. That is a 2.83 to 1 overall. Now, 20.98, we're putting that there because that's where the buyers start. So if we're selling, we of course want to get out of that before buyers come in. So with that all in mind, let's come back to TradingView and we will just copy it over from here and place that trade. Okay, TU. Let's just hide this for now. We're going to use the data that we see on top, which is coming from TradeStation. So the entry was 22.96. That was close. The stop loss is 23.66. There we go. Again, those of you that use Fibonacci's as they were intended, I apologize. I'm using them just as a drawing tool. So our final target was 20.98. There we go. So like we said, 2.83 to 1. And we'll just confirm our safety target. So 22.96. Stop loss of 23.66. Risk, I'm just going to put $50. I always put $50 just as an example. It doesn't mean that we actually all need to do that. It's an example because it's $100 in half. It's very easy mathematically. You guys obviously choose whatever you want or don't place the trade at all, of course. Okay, so that is 22.26, which is what we had here anyway. And we'll put that 1/2 of the trade in. Good tool. Deleted. Okay. Same here. 22.96. Same entry, same stop, same risk. $50. Again, as an example. And in this case, the profit is 22.26. Sorry, no, it was 20.98, which is a 2.83 to 1. There we go. Okay, so we've put this trade on. Let's now put a little note. So placed 2nd of September 2022. This is a 1 week, 3-day short. And nothing else really to make a note of. Okay, great. So we'll go and fill in the form, but let me just show you. If I go back to tradewithufos.com/Becky and I refresh, and then I come here, you'll see that last trade has been put on. So it takes seconds to update. So as I update it, as the trade evolves, then you can update and you can see what happens. Okay, so that was trade number 1. Now, just to say, by the way, I forgot to say this at the start, you'll see the ticker along the bottom of the screen. That ticker is telling you about our book that we've just released. Now, this is a stock session and the book is about Forex, but a lot of people will trade more than one asset. So if you want to learn more about Forex trading and understand about our methodology and how our technology works, how the Forex markets work in general, I think it's like $3.89 or $3.88 ebook that you can get on Amazon. So if you check out the ticker, then you can go and have a look at that. Okay, so we've done that one. Let's move on to the next market. So trade number 1 of the day has been placed. TAC, Takeda Pharmaceutical. Okay, again, want to bear in mind that we've got sellers close by, but let's see. 14 exactly is where we have the UFO. So let's see if we have, sorry, 14 exactly is where we have the EMA. So let's see if we have a UFO that lines up. Okay, not high enough there. 144. It's not loaded yet. That's why it's mainly blank and says 20%, but let's wait for it to load. We won't have a UFO there because we've got enough data to have seen that already, but okay, interesting. Nothing really on there. Okay, nothing on that one. Next trade. Smith and Wesson. 14.13. Oh, we've got buyers, but a long way away, relatively speaking. We'll wait for this to load again so we can get a more accurate number. That is 50% on the dot. So 14.13 is where we have the EMA. No UFO there. We do have a UFO here, and we've got enough of a number. So I'm going to keep looking at timeframes 2 days and 3 days as well, just to see if we can get an increase on this number. If not, we'll come back to the 1 day. Okay, we do have an increase on that number. So the 2 day is winning so far. Still got a line up there. Okay, 2 day wins. Again, very objective. It's just to do with the numbers. Which number's the highest? Pick that one. Okay, so this is the UFO we're going to use. The EMA is 14.13, so again, fits nicely within this UFO. We've got sellers from the EMA in the context of a selling climate, probability down. We've got buyers a long way away, so room to take this to the downside. So let's come back and place this trade. So September 2nd, 2022. I don't know why it wants to be bold. There you go. So this was SWBI. It's 1 week and 2 day. Short. Entry 13.90. Again, it's this smaller number. Stop loss would be 14.55. So we're rounding up by 10 cents, giving us a little bit more wiggle room. The final target will be 8.06. That's where the buyers start. That's an 8.98 to 1. Now, let's be realistic. The larger the reward to risk ratio, meaning the more you can make from the trade versus what you're risking, the less likely you are to have that happen. If you're only looking for small movements in your favor, much more likely to happen than looking for big movements in your favor. So we sacrifice probability for reward to risk ratio and vice versa. Obviously, we want to find the right balance of both of those, which is why we have a minimum 1-to-1 rule. But we have ways that we can manage it if we do have trades that are really far away. So the last time, just to give you context here, the last time price was down here was back in May 2020. So again, the chances of it coming back down there soon, less likely. Not that it won't happen, it's just less likely. So if we are right and price does hit this UFO, which it looks like it has recently anyway, starts to move down, maybe or probably by the time it gets anywhere near here, there's going to be a change of climate. We won't have probability down anymore. And so we would close out then along the way for some form of profit, but not the full profit. Because if price starts to move down and then starts to move back up again, and the probabilities change, we don't want to just hold on to it and hope. It's not a very sensible way of trading. So we get out if the parameters change, meaning if the climate changes. But for now, we have enough probabilities, so we will place this trade. SWBI. No, thank you. Okay, so the entry was probably around here, isn't it? 13.9 to 14.55. So yeah, just around this area here. It was a 2-day chart anyway, so let's just do that so I can more easily reference. Okay, now we want our final target, which is all the way at 8.06. According to my calculations on my spreadsheet, our safety target should be 13.25. There we go. So let's place the trade. So 13.9 is the entry. 14.55 is the stop. The risk, again, I'm going to put $50. You do what you want. The safety target should be 13.25. There it is. There we go. Second half of the trade, same entry, 13.9, same stop loss, same risk, again, as an example. And the profit target, 8.06, which should be an 8.98 to 1. There we go. Second half of the trade is in. Or second half of the trade is in. So placed on the 2nd of September 2022. It is a 1 week, 2-day short. Brilliant. There we go. So again, I use Fibonacci tools to draw, so I can much more easily see where my entries and stops are. It makes it really easy to figure out what happened with the trade. And I put a little note on, so again, just to remind me, so I'm not having to look back and forth between different logs. Okay, back to top. Next opportunity. Just mute for a sec whilst I have a drink of water. Okay, so RLJ lodging. Again, this one's close to sellers, so not bad. Let's have a look. So 12.37, nothing there. Go to the 3-day, nothing there. 1 day, nothing there. 144, nothing there. Move on. For those that are newer to trading and you've just watched me do that and it's too quick, if you're watching the recording anyway, just pause it on those moments and you can just have a quick look. Does this number fall within these numbers? If it doesn't, we move on to the next time frame. I look at 4 different time frames on the right hand side. If I don't see anything that I want to see there, then I'll just move on to the next opportunity. Okay, 13.51. Now, we may have an opportunity here. 13.51 is where the EMA currently is, which is 3 cents below this UFO, which starts at 13.54. But price is 13.19. If price moves up to 13.54, which is 35 pips away, if my maths is correct. Pips, I always say pips, sorry. So cents. If price moves up by 35 cents, is the EMA going to move up by 3 cents? Probably, right? Very strong likelihood. So I would be willing to place this trade for anticipating that coincision, if that's the word. But let's have a look at different time frames and just see if we can increase that number and or find a more aligned setup. This is aligned enough for me, but let's see. So for example, the daily chart has a bigger number and already coincides with that number. It would mean going in at market right now, whatever the price is immediately. Oh no, 2 cents above. Check the 2-day. Not a big enough number there. So far, the 1 day is winning with that. So we'll come back to the 1-day chart. So we would be going in now, slightly lower down, but it would mean getting into this trade sort of now. So let's have a look. Brings in PRMW. I feel like we placed that trade a lot. I feel like it's often lining up with what we want it to line up with. Obviously, that's a very subjective thing to say. I feel like maybe this has happened. It's not normally what we want to do. We want to be much more objective, but it just stands out to me, I think. But I can't see it on this list, so it must be me. Okay, 13.85. Final target is 9.35. Oh. It's just brilliant. Okay, so 5.92 to 1 on that half of the trade. Let's now go back. We might end up getting in at market, but let's see. Because price is obviously 1 cent currently, 1 cent below it, 2 cents below it. Go around. Okay, so 13.20 is the entry. And the stop loss 13.85. Final target 9.35. And safety target is 12.55. Okay, let's squish this down so we can see both targets. And let's place this trade. So same risk as always for me as an example. First half of the trade in. Second half of the trade, same entry, same stop, same risk. And it will be 9.35, which is 5.92. Brilliant. There we go. Second half of the trade in. That is the third trade of the day. Placed 2nd of September 2022, 1 week, 1 day short. Okay, feel like we're on a bit of a roll. Let's come back to top and keep looking. Owl. I like the sound of that. Let's have a look. Okay, so we've got no buyers. So if we do get into a trade with this, we'll have to have a trailing stop for our second target, which is okay. Our EMA is 11.53. So let's see if we can find something that lines up. Nope. Okay, next one. Kim. Okay, so we've got buyers close by, so we need to see how big the UFOs are on the right-hand side. 21.78 is the numbers that we're looking for. So this might align. 21.78 is 8 cents lower than this. Price would have to move up by 44 cents. Not as close as I'd like it to be. I feel like we've got a lot of other opportunities. So let's move on from this one. We've got buyers too close and it's maybe slightly far away with the EMA to predict it as accurately as we have with the others. 38.12. Let's have a look. Nope. Next one. Key Corp. 18.43. Nothing there. This one starts at 18.43, so that's a good one there. We've got enough of a probability rate there, which is good. We'll have to use these two UFOs together. Let's check different time frames to see if we can increase this number. So far the 2-day is winning, still winning. Still winning. Okay, so 2 days. Here we go. Next trade of the day, Key Corp. 1 week and 2 days short, 18.43. So that's the entry, which is where the sellers start. The stop loss, we're going to take 1987 and we're going to add 10 cents. So the highest number of the second UFO, the furthest place where we find sellers, add 10 cents to that, 1997. The final target will be 13.94. That's where we first have buyers. Okay, let's place the trade. Can't remember, it was Key, wasn't it? Key Corp. Let's just quickly check. I'm looking at the right thing. I am, okay. $18.43 is the entry. The stop loss 19.97. The final target down here at 13.94. And the safety target will be at 16.89. Brilliant. Okay, let's put the trade on. 18.43. Stop loss of 19.97. Risk again, $50 as an example. You pick what you want. And if it's 154 cents of risk, then it's 154 cents of reward. So 1689, one half of the trade, second half of the trade now being placed. So this one was 13.94. There we go. Let's put a little note. So placed 2nd of September 2022, 1 week, 2 day short. All right, so we've now placed 4 trades. Let's keep going. And we'll place as many as we can before we run out of time. So we just put on key. So yeah, we must be on this one, Hartford Financial Services Group. 66.52. This is good. We've got a lot of room to move down. 66.52, that is the UFO that we want to find, or the area that we want to find it in. Nothing there. Next trade, HA, Hawaiian Holding. 15.57, again, no UFOs to the downside, no buyers there, which means we'd have a trailing stop if we are going to place a trade here. 15.57 is the number that we're looking for. Too far away. So 15.57 is there. Price is at 15.18. Price would have to go up 60 cents to get into the UFO. Price goes up by 60 cents. Would the UFO go up by 23? It's harder to call. If it's harder to call, then it's less objective. I'd rather move on. Groupon. Okay. Again, no buyers below. So if we do place a trade in this, then we'd be looking at a trailing stop for our second target. 11.6 is what we're looking for. So nothing there. Okay, so we do have a UFO here. I'm going to wait for this to load because at the moment it's only loaded, what, a month's worth? So I'm just going to wait for this to load fully. Okay, so now that it's loaded fully and we've got more data, this number is nowhere near where it needs to be. That needs to be a minimum of 50%, so no trade. Next one, global payments. Buyer's quite a way away. The EMA is 125.45. Let's have a look. Not close enough. Nope, nothing there. Next one. I have had sessions before where I just go through and none of them line up, which happens, right? When we trade sometimes, we're not always going to have the right opportunities and everything lining up the way we want it to. Sometimes you have sessions, or I have sessions, where it's constant, which kind of what we have here. So, oh no, that number's not big enough. And neither is that one. I spoke too soon. So sometimes there are sessions where we don't even get through a third of the list because we've got so many opportunities. It just so happens to be that way. Other times, you go through over and over again, nothing lines up, maybe 1 or 2 trades. Most of the time, obviously, somewhere in the middle. Now, bearing in mind, we have buyers very close here. Price has just touched those buyers and was pushed up by those buyers. That's why we want to know where buyers are, because they push price up. So that's why we want to know that. So I'm thinking, what would that be? 48 cents. It'd have to be really, really small area here, but let's have a look. Nope. Nope. Okay, nothing there anyway. Fox again. Obviously similar situation, just hit buyers. No, it's way too close. It's only 7 cents away from the buyers, so we don't have room to take it to the downside. Every. So this one is the opposite. We've just hit sellers. Just hit sellers, they're pushing price down. Even better situation if we can balance those two things. So we need a UFO at around 18.94. Let's take a look. 18.94. Okay, unfortunately not lining up. I liked taking trades if we can add to the probabilities and have weekly on our side as well, even better. Okay, no UFOs to the downside. So if we place this trade, we will be taking a trailing stop as our second target, but let's see. 18.92, that's what we're looking for. Okay, we have a UFO here. That works. That works. Let's go to the 3-day and see if we've got a better number. We do have a better number. Okay, so we're just explain something quickly here. We are going to be sacrificing one thing for another here, but I'd rather take the bigger one. So on the 2-day, we have a UFO that works because the EMA is at 18.92, just within this UFO. So that works nicely. We've got a 57% probability rate, which is fine, more than what it needs to be. However, on the 3-day, we have a 62.28%. So it's 5% more likely to work. It's not exactly how that works out, but roughly we have a greater chance of our UFO working on this time frame. However, we do have a bunch of UFOs back to back. What that shows us is that we're going to have a wider risk. Now that means it's harder to hit a break even, because if our risk is 10 cents, then it's only got to go 10 cents in our favor for us to hit our safety target. If our risk is $1, then it's got to go $1 in our favor before we're at safety. So the wider the risk, the further it's also got to go in our favor to balance that. However, the smaller the risk, the more likely we are to get stopped out. So pros and cons, both sides. I'd rather use the one that has a better probability rate. So that's what we will do. CNO. One week and 3 days in this case, short. So we're going to take this smallest number, 18.46. And our stop loss, we're going to take this one. So these three are overlapping. 20.92 plus 10 cents takes us to 21.02. Now that's just before this last UFO. You could extend it and take that even higher UFO. However, the stop loss falls in the white space. And if the stop loss falls in the white space, then I'm generally happy to keep it there. However, like I said, you could, if you wanted to, you could bring that in as well. Okay, let's just get this to do my maths for me. I like maths being done for me. I'm not very good at it. So we've got a trailing stop, I believe, for this one. Yes, okay. So I'll show you what that looks like as we place this trade. So final target is going to be trailing. Obviously, when we put in trailing, it cannot work it out because we don't know where we're going to get out at. So let's explain what that means once we place the trade. So we're looking at CNO. Looks like we might have had a trade here before. Back in Feb. Seemed to be a profitable trade there. 25th Feb. Yeah, okay, so I haven't deleted this. So this was a trade that we placed. Looks like we probably would have got into it. Let's have a look. I placed it on the 25th of February. I think it hit that week, did it? No, not quite. Hit this week. Probably lined up with the EMA. So either we cancelled this trade and we didn't get in it, or we hit both our profit targets. But, oh no, actually, just looking here. So we either cancelled this trade before we got in it, or we would have got out right at that point anyway and actually taken a very small loss. So, okay, let's get rid of that so we can place this new one. Okay. It was 18 something, wasn't it? Oh, click the wrong thing. Okay, 18.46 is the entry. 18.46. Did not need to put that in there. And the stop loss is 21.02. Okay, for that area there. The safety target has been worked out here at 15.9. We'll check that in a second. So let's put that on and then we'll show you how the trailing stop situation works. So 18.46 is the entry. Stop loss of 21.02. Risk $50 again as an example. You do you. Safety target 15.90. Again, that's what we want it to be. Okay, so first half of the trade as normal. Second half of the trade, we don't have an objective place to get out because we don't see buyers. The only reason we would get out of a selling position is if we have buyers. Now, we don't see them already on the chart, which is rare, but it happens. So what do we do? How do we know when to get out? So we're going to have the same entry, the same stop loss, the same risk. But what we won't do is have a target. So we just put it in like this. Now, what this means is, let's say we're right, we get into the trade, price goes in our favor, hits our safety target. Maybe a new red UFO is formed. If a new red UFO is formed, say here, then we take our stop loss from here and we put it behind the new red UFO. Price moves in our favor, new red UFO forms here. We take our stop loss from where it was and we move it behind here. So we're trailing our stop loss behind objective places that show us where if price moved through that, we'd be wrong. We want to keep our stop loss behind the sellers. So the only thing that can stop us out is if buyers break those sellers. And if there are way more buyers than sellers to the point where they push through, we want to be out of that trade, which is why we put our stop loss there. So that's what we'll do here. Put a little note. Placed 2nd of September 2022. It was a 1 week and 3 day short. T2 is trading. Can I put that just in case I look at it and I go, where was my second target? What happened to it? Okay, let's come back to our list. We obviously don't know, but we may find that we can get to the end of the list before time runs out. Let's see. This one is very close to buyers, so we're going to have a very small. Okay, so not a big enough number there. We're going to have a very small UFO on the right-hand side to make that worth doing. Nope, that doesn't work out. So we'll move on to the next one. Carrier. 40.31. Let's have a look. 40.31. Nothing there. BRX, Brixmore. Very, very close to buyers. Not that close. It's about, what, 60 cents away, 70 cents away. 22.34. So again, we want a small UFO. Can't do this one because that number's not big enough. That number's big enough, but not lining up. And not lining up there. Okay, so no trade. Next one, Big 5 Sporting Goods. Oh, we've got buyers all the way down at 0.33 cents, a long way away. That would be a very good return, reward to risk if it went all the way down there. Doubtful, but let's see. 12.36. Nope. Ben. Very close to buyers, but depends how big the risk is. So 26.6, nothing here, nothing there, nothing there, and nothing there. Bank of America, 34, what was that? 34.07, I believe. 34.27. Okay. 34.27. Nothing there. So, last but not least, ABR, Arbor Realty Trust. Let's take a look. 15.16. So that falls within here. And we've got a big enough number. Not sure if we're going to have enough room to take it there. Let's have a look. So that was the 3 day. So far the 3 day is winning. The 2 day is not lining up. The 1 day is not lining up. The 144, very big number there. But 1476. I think that might work. This one might work. Oh no, it's just loaded. Not enough probability. Okay. We go back to the 3 day. Okay. So let's just see then. Let's bring this in and see if we've got enough room here. So ABR, 1 week, 3 day, short, 14.98 to 15.67. So safety target is 14.29. So as long as 14.29 is above the buyers we have on the weekly chart, which it is, then we place a trade. Brilliant, that worked out. Only just, but rules is rules, and that worked out well. Okay, let's place our last trade of the day then. That worked out nicely. The last one that we look at has an opportunity. ABR. Looks like, again, this was a trade we placed a long time ago, back on in May, which was before we started using this new log. So back in May, let's have a look. We would have cancelled this trade anyway, because by the time it came back for entry, auto climate wasn't lining up. The EMA definitely wasn't lining up. So we would have cancelled this trade anyway. Okay, let's have a look. 14.98 to 15.67. Safety target at 14.29. And final target very close to it at 14.07. So as long as the safety target is closer to your entry than your final target is, so if you're going short, your final target must be lower than your safety target. If you're going long, then your final target must be higher than your safety target. Providing those parameters are hit, then we've got enough room to place the trade. Of course, providing all of the other parameters we look at are also met. Okay, so first half of the trade, done the maths right, there we go. Second half of the trade, same entry, same stop, same risk. And the profit target, 1407, which is a 1.32 to 1. Again, not a lot, but more than 1 to 1. Let's put it on note. Placed 2nd of September 2022, 1 week, 3 days, short. Okay, so let's just double check on top that we have exhausted our list. We have. We've now gone bottom to top, or top to bottom alphabetically, but the other way around. Looked at every single one of these stocks that line up with probability down on the weekly time frame that were close enough to the EMA to make it worth looking for us. Now, what we've done is we've placed, in fact, let's look at it here. If you look at tradewithufos.com/Becky and refresh it, then you'll see here all of these trades have now been placed. So we've placed 6 trades today. You can use this, by the way, and you can add your own stuff, as it will come up and tell you any changes made to the spreadsheet won't be saved to the original file. So you can do that and then save it to your own account. Use this as a template, add your own things in there. It won't mess with the original file, so you can use it like that. So we've now got all of those extra trades in. I'll reformat this so it all fits. I don't have OCD, but I guess a little bit OCD to not like that they're not the same format. And then you can check over time, as with these trades. For example, this one's open. We know when the target one was hit. These ones were cancelled. Here are the snapshots of that hopefully explain why. Notes that explain why. By the time price would have entered, the EMA wasn't lining up and the auto climate was unconfirmed, so we cancelled it. So you can see why we've got a couple of small losses, small profits, a couple of more small profits, losses, profits, cancelled, all explained as to what's happening and why we're doing that on the right hand side here. You can also use this link to check out our apps and courses and coaching at different levels, depending on what you need. You can also scroll down right to the bottom and learn from our question and answers area. Find the answer to the question that you have already there, or post the question that you have and we'll answer it for free. You can also email me, Becky@tradective.com. I'm always happy to help. So That brings us nicely to the end of our stock session for today. Today being Friday, I will wish you a great weekend ahead and a great trading or great end to your trading week. And I will see you next time. Take care. Bye-bye.